Boom. We are alive, ladies and gentlemen. Thank you all for joining us today. And just like any good habit, it takes time and it takes repetition to really build the muscles and gain the strength in any discipline that you want to really see the results that take the process of education, research, due diligence, failure, and then at the most exciting of times, the success of all of those things combined. So what we're going to do today is start off by taking a look at Bitcoin. This is let's call it our North Star and our guiding light as our collateral layer for our new thesis on the ever-changing and evolving financial sector. Now, one of the important things here to remember is that this chart that I have drawn here has been drawn this way since approximately May 2020, just a short few months after the pandemic started, because that was when the bull market began. Now, the important things that we're going to go over here are based off the Wyckoff accumulation and distribution charts and understanding where we are in the market. Now, we are in a riskier place than where we were when we first started making the videos about this particular pattern in May of 2020. And it's always kind to note that one of the reasons why we go over constantly the macro perspective of the market, as if you had bought, say, Bitcoin at the all-time high of $1,000 of 2013, the importance of the scale invariant nature and the time that it takes for these cycles to repeat. Because if you had bought Bitcoin at $1,000 and it had come down to 200, you may have thought you did something wrong. It is so key to really understand that, first off, the nature of a good investment is to focus on the value of the investment and the price is a secondary function. This can be asserted in so many different ways. We've done videos. You can look up how to time the market perfectly or the best investors are dead. I think these are great ways to research some of the sentiment. And what we're going to do today, again, is go over how we got here, recognizing the importance of A, getting into the market during its slow times, and B, understanding the risk to reward relationship at these intermediary points of the market as well. Because again, had you bought Bitcoin at the all-time high of $1,000 in 2013, as long as you understood the value and the nature of being a good investor, you could have continued to accumulate regardless of what the price was, increased your portfolio size, and today be sitting on a significant sum of capital. So instead of the fact that I'm sure a lot of you are new to investing into this sector, what we want to do is consistently repeat the process of understanding the story from point A to point B, back to point A again, so that you do not get confused on the short-term time frames, getting slopped around in the market like the average retail investor, because you are more focused on the value instead of the price. Bitcoin's value here is extraordinary as a collateral layer, and every day we have moved forward, it has proved itself. So let's start to look at, first off, the accumulation range, which we were focusing on between the months of March, April, May, June, July, when we had our first start of the breakout and our reaccumulation patterns there afterwards. So as we zoom in right now, what we're doing is starting to focus on a very specific area of the 2020 bull market accumulation cycle, which is right here. So for those of you that are studying, we had our primary selling climax back here in December 11th, 2018, when the price dropped down to a whopping $3,800. We very quickly had our first automatic rally, starting the trading range that we then went into for almost 600 days. Now, most of you did not show up here in any way, shape, or form for those 600 days, yet that is such an important part of this story, that when the markets are boring, when no one's paying attention to them because they're more concerned about the price than the value, these are the areas where you really want to stay focused on what is the value of something, and the price becomes irrelevant. Because then, like any good investor, you can take your time to accumulate and consistently add to your portfolio where it seems good, or whenever you have the money. Personally, I suggest that any consistent behavior you can find, just like going to the gym, whether it's $50, $100, $5,000, $50,000, $500,000 that month, whatever fits your general accumulation strategy, it should be repeated on a day-to-day basis, just like going to the gym. Just like any good habit, you're going to need to understand A, the time that is necessary, and B, the consistency in that habitual function to take place. So we saw our automatic rally. We then dropped into our secondary test. Now, again, I have not changed this drawing since May. Like all of our regression lines, everything here has been moving quite nicely since May. So as soon as we had the pandemic, we had what was known as a spring. Now, we talk frequently about scale invariance, and one of the fun functions here, as we will show, is the reaccumulation patterns and the accumulation patterns that take place within and with outside of one another. So here is the general accumulation pattern that signaled the bull market. But if we zoom out a little further, we can see that there's actually a larger accumulation pattern that took place where we stubbed up against the resistance at around 19,000 and continued to go much higher. What's really unique about this, and I want to go over two things here that are hyper important. Number one, when you have a breakout of the box signaled here, again, that this would be our now larger trading range. We were just getting in at the bottom of the trading range, a trading range within a trading range. Again, this is the nature of scale invariant functions. What we're seeing now is an SOS and an LPS range. And we saw this exactly in 2017. We've gone over this a few times before. And if you saw the thumbnail of this photo, which is one of the reasons you may have clicked here, let's go back to 2017 and look at the identical nature that took place here. Here, again, you can see that if you were savvy to the Wyckoff accumulation ranges, there's a very nice trading range that took place here. Your first SOS, LPS, SOS, and LPS again. And notice how at the top of the buying climax, again, now a much larger trading range, because we see a trading range within a trading range, again, scale invariant functions of patterns themselves. Here's the SOS and the LPS that started a much bigger bull market. Now, one of the difficult parts here is that the LPSs can often come back to the top of the trading range itself. And this is what we saw in 2013, is that we saw a big run up, and then basically an LPS became an entirely new trading range for a 2-year process, right? So we could be headed to, and again, an intermediary moment is what I believe, where we hit a reaccumulation style for potentially a few months to basically bore the average investor. The people that don't understand the consistency of the investment strategy is better than getting in at a particular price. It's just accumulating things of value over years of exposure to those valuable ideas. So first off, I want to say two things, or I guess not first, we're kind of in the middle of this conversation so far. Number one, if you did not show up here in the beginning of the spring when we were making videos screaming at the top of our lungs to some degree that this is the start of the bull market, ladies and gentlemen, hot damn, put your fucking moon boots on, and you managed to enter here, understand that you are likely going to be focused on being an investor, not a trader. If you focus on being a trader in your early days, you are most likely going to lose money. So this area here where we're at right now is looking like an LPS. And if we look at the broader markets, there is a not total signal yet, but a potential signal that we're going to see a drop in the NASDAQ. So we've been going over Wyckoff accumulation, distribution, reaccumulation ranges, and again, the scale invariant function of all of these features. So we'll go back to Bitcoin just to kind of finalize here. But as we were exploding in price, and you go back, you can watch all of our videos. What we were doing is we were watching these 1-hour reaccumulation charts. And a lot of people have made comments like, oh, you're on the 1 hour. How is it even relevant to the multi-day distribution chart that took place? Well, here you have a 1-hour reaccumulation pattern that continued into another 1-hour reaccumulation pattern that were both extraordinarily bullish. Because scale invariance functions on so many different areas, what you can actually see is that each one of these time frames provides us a new trading range. Here, you actually had a distributional top on an even smaller time frame, the 15-minute, right? And this is one of the most important parts, is that you can study things of these invariant natures by just looking at all the time frames and really teaching yourself to understand how these functions work. So going back to this particular moment in time, we can see a few key characteristics of this temporary distribution on the 45-minute taking place. But it was very, very irrelevant in terms of the macro perspective. So generally speaking, on the smaller time frames, they become irrelevant. The bigger time frame is really where the story and the picture come from, right? So in the previous bull market, we came back down after the bull market finished to the primary regression lines. As a matter of fact, if we carry these out for probably quite a ways, you can see that we will have spent time just above the primary regression lines. Anything within the primary two regression lines of the previous buying climax were areas that were the most beneficial for accumulation. Today, where we are now is that exact same space. Here are our primary two regression lines between 48,000 and 30,000. Now, we do have two lower regression lines which represent the bottom of our testing range, which we never came back to in 2013 through 2017. I believe still, and am quite confident about this fact, that these areas are amazing areas of accumulation. And as the next bear market comes in, because I do not believe we have entered a bear market yet, anything within these ranges, especially extended outwards through time, again, the functioning nature of repetitious patterns, something like this, will prove to be the next bottom of the bear market, somewhere around $40,000 to $30,000. Now, a big question is, could we come lower? Everyone's like, oh, could we go lower? Yes, we could. But to me, as a long-term low risk, high value investor, what I'm trying to always understand is, where is the risk lower, and what is the value of the asset that I'm trying to accumulate? Let's say we come down to $20,000. Well, fuck yeah. I'm going to be buying as much as I possibly can. Now, there's a general risk here. Again, we are not in a bubble. The Bitcoin markets do not live entirely by themselves. And the start of the bull market in Bitcoin also represented the start of a new bull market in the NASDAQ. So if we look at the NASDAQ here, we remember that these are the traditional markets. This is the area of the spring that took place for Bitcoin at the beginning of the pandemic. This was the opportune time to get into every single freaking asset that you could get your hands on. Every asset across every spectrum of investment almost from this day, March 11th onwards, represented the start of a new bull market. So far, we have been in that market move for around 400 days. Equivalently speaking, when you have an accumulation range that took 1,200 days to process, the bull market is usually around approximately 1/3 of that time frame. We have not been in a bull market for more than 192 days, yet we have over 1,000 days of accumulation. That's a quarter, not a third. And that's what we approximately saw in the previous bull market too, is around 1/3 of the time that we spent in accumulation, we spent in a bull market, leaving the primary accumulation range into the bull market itself. For a fact, from the day that we left a middle ground, the day that we left the first trading range to basically where, let's go to 190 days, is almost identical to where we are now. So here we can see we left the trading range of our Wyckoff accumulation strategy here. And then 200 days later, this is where we were. Now, it's key to note that this accumulation range is around 1,200 days. It is almost identical in time frame. And when you're thinking about the nature of scale invariant functions, time is so important. This is why we use linear charts, not logarithmic charts, is because we don't give up what the price percentage is. We care about the duration of the time within each of these processes. Now, yes, we can use logarithmic chart. It does actually give a little bit of an easier kind of visual picture to see how these things work. And yet again, more to our interest is actually the time from here to here when we broke out of this trading range. So here's the first trading range, up 1,243 days. And then here is the second trading range, boom, from here to here, approximately 1,174 days. Look, the duration of this market has just started. This is another reason why I believe we're not done. Now, again, when the NASDAQ here is in such a, let's call it a precarious area on the 1 hour, we could be witnessing a temporary moment where we do go lower. Now, we've talked about the spring in Bitcoin bringing us to around approximately 29 to 28,000 for this accumulation range, and that's a very high potential. I don't see how we go too low for too long when they're printing such an enormous amount of money, and we know that the dollars are basically useless. Any investor who's hyper intelligent about this moment is going to recognize two key factors. Number one, the US dollar is a liability on their balance sheets now. It is not an asset. And therefore, they're going to look to accumulate as many assets as possible. But we do see what could very easily be another distributional pattern within the NASDAQ itself. So I apologize for the childlike drawings. I've been studying this stuff for so long. I usually don't take the time to draw it out perfectly. Let's just do it, give it a little bit more time here. So here we're witnessing a new trading range, and we're currently watching a smaller rising wedge, which is a somewhat bearish pattern, which I believe is probably signaling phase C, which is, you can look at as an upthrust after distribution as well. And we actually have a very key supply signature that shows that. So for those of you that have been following along with us for quite some time, you'll recognize this right away. Look at the amount of supply it took here to go very limited to the upside, and then look at the limited supply it took to go to the downside. This is basically a perfect distributional pattern. Now the downside is, again, we're only on the 1 hour. This may be a temporary moment where we see a fair function of maybe it comes down to 142, which again would represent a huge move in the traditional markets. It would send shockwaves through Bitcoin if this happens. Bitcoin could come down to $20,000 very easily if this happened. And what we need to remember again is that the importance of understanding the larger macro perspective is how we go about our accumulation strategies. There are areas of less risk, and you should just be still accumulating. Just like Michael Saylor has bought Bitcoin at 50, he bought $15 million at 54,000. He bought $15 million at 60,000. You're probably going to see a press release where he buys another $15 million at 33,000. Because just like the gym, if you understand the value of what you're doing, you should show up all the time. So let's go ahead and go back into Bitcoin. And again, I know we're only focusing on Bitcoin today. I just want to keep repeating this story so it becomes as deeply ingrained as possible for you, because that's where the proper habits are created. They're not created, oh, I'm going to get in and get out and do this and do that. If you are really good at this type of stuff, you will make more money as an investor than you will as a trader. Now, some people like being glued to screens and doing nothing but staring at charts. It's possible. You can make good money doing that. It's not my favorite thing to do. I much prefer this accumulation strategy and the consistency of showing up, because it produces real gains all the time. If you go to the Forbes top list of investors, it doesn't say day trader. Only one person has ever made it there, Mr. Jim Simmons, and you've probably never heard of his name. All the others, like Ray Dalio, Warren Buffett, George Soros, almost all of the Forbes top 500 most wealthy individuals are either entrepreneurs or private equity or venture capital investors. These are not people who are day trading. The day traders are usually insignificant in compared to those who know how to make high value, low risk investments. And that is our strategy. Again, I suggest reading books like 100 Baggers or Dan Dow to really drive home other deeper parts of this thesis from people who have already made hundreds of millions of dollars. I'm just on my way there. So what does this mean? Okay, yes, there is a risk that Bitcoin could come down into the $23,000 area and start an accumulation time, which may take even longer. I'm happy with that. I'm fine with that. If you go back and look at my videos and you listen closely, you will know that I took out a nice chunk of my position at around 56,000. I said, this is too risky. It could go either way. If you want, you can actually even go and look at this video by going to tradingview.com. Why not? You can follow us here as well. If you go to tradingview.com, I think it's under Arcane Bear profile. Yes. Here's the potential distributions for Bitcoin and Ethereum we talked about. This was on April 23rd. This was well before we started to fall. And if you listen closely, this is what we had to say. Like this before, kind of one of the downsides to reaccumulation is the idea here that phase C, as we saw, very quickly can turn into distribution. Now, part of one of the things I've been struggling with, well, not struggling, but at least contemplating here, is how low do we go? Ultimately, at least previously, when we've seen larger scale distributions like this has been the end of the bull market cycle. I don't think that that's the case. We could see a return down to like $32,000 and end up. And this is actually exactly what we've seen so far. We've seen a return to this median area where there's been a large amount of accumulation by big investors. We know people like Tesla bought billions, 1.5 billion to be exact, worth of Bitcoin at this $30,000 area. This puts what we would call a decent floor of investors at this particular spot. And if we compare it to the previous bull market cycle, this was the floor of the rest of the bear market cycle that continued for 1,200 days afterwards. If you were able to buy anywhere between the regression lines as they continued, and we'll go over this. I don't think I can repeat it enough. I have some of you in the chat where it's like, why do you keep repeating the same thing? Because it's fucking valuable. Just like the same reason why I go to the gym and do the same thing. It's because it's valuable. This moment between the two previous regression lines of the buying climax and the automatic rally represented the best areas to get in Bitcoin's price for the continued 1,200 days afterwards. The three most important areas of accumulation took place based off those regression lines, and that is exactly where we are today. We are exactly in the middle of both of these regression lines, and I think if we carry this out into the future, this entire area, even if we get a little quick little dippity-doo-dah down to, like, let's say 24,000 just to scare the crap out of people, that's probably the bottom of the bottom of the bear market for the next 2 to 3 years. This represents to me an area of accumulation. Anyways, I hope that's helpful. I just wanted to repeat this stuff. Let's go over really quickly the kind of the last sentiments here on a more micro pattern as well. For those of you that are following along more closely with the trading range ideas, again, we are in the midst of a trading range right now. It could very quickly turn into a distributional pattern. It could very quickly turn into a reaccumulation pattern. We're going to want to wait for confirmations of that. There are a few fun things we like to use. Our Bollinger Bands are one of them. Here you can see we've come up right to the top of our Bollinger Band. If we start to close above the Bollinger Band here and stay above 40,000, we're probably going to see a big move. And again, even still, this area represents accumulation to me. I don't really see us coming too much lower, and even if we do, on a percentage basis, for those of you that are savvy investors, it should just represent further areas of accumulation because it probably won't last that long. You will maybe get a few days down there. I would have limit orders already set if I were you. Other than that, everything on the macro story, which is the most important to me because it allows me to continue to read my books, drink my tea, go out mushroom hunting. For those of you that don't know, I love hunting mushrooms. This is a reishi I found yesterday, probably the sexiest reishi I've ever found in my life. Anyways, just want to keep you guys updated on what I actually like to do with my time. Macro stories, that's the most important part, ladies and gentlemen. We'll leave it at that. I hope you guys found these repeating patterns extremely valuable. We'll take the last few minutes of our episode to go over some of your guys' thoughts and questions. Again, remember to follow us on the social media channels down below. We post on Twitter, we post on LinkedIn, we post everywhere. We're kind of like chess, not football, so we're not super popular. We are very, let's say, eclectic in our thought. And because of this, we'd like to focus on the eclectic nature of things itself. Again, remember, you can go and find us on Twitter here. I actually wanted to give a big shout out. We did finally break 10,000 followers. We're about to be at 10,000.5. That's nice to see. So thank you guys all for following us on Twitter as well. And if you are already on YouTube, remember to subscribe to this channel because it helps our videos go further, farther, faster. Let's see, here we go. I could have just clicked a button, I'm sure, but that's always a fun thing to do. Help grow the Bear family. So thank you guys all for joining us. Give us a thumbs up if you like this content. I will again take a few more minutes at the this episode and right now to take a look at just a few of your guys' questions and go from there. Let's see, here we go. Let's see. Okay, Hamza says, every good thing takes time. Long term is much more potential and less stressful, and you can go live. 100% agree. GS says, Tio, why are you repeating the same stuff? Once noob stays a noob. Yeah, exactly. You just answered your own question, I believe. If you don't understand the importance of continually going to the gym and doing the same thing, you're never going to get the gains that you want. NASDAQ and New York Stock Exchange has been flatlining last few months. Yeah, again, we could be witnessing a kind of a larger yacht buying moment. I don't think it will last very long, just because a lot of these investors do recognize that cash is now a liability. They'll probably be investing in new businesses as well. Spiral says, as soon as I can afford the member, we give a lot of this information away for free on a day-to-day basis. The Den is specifically for people who have skin in the game and like to join a community of like-minded individuals who are constantly working together to share their insights. Nice. Kyle says, my girlfriend has found a huge reishi camping. I love mushroom hunting. MA says, need some hair tips, Arcane. How do you deal with hair loss from stresses of crypto? I don't get stressed about this stuff because I focus on these macro perspectives. Just in general, I think it's a much healthier attitude towards life. The day-to-day is almost insignificant. What if you knew that 5 years from now you would have $100 million because you played the proper strategy? You should act like that today, because then that is how you will get there tomorrow. Graham Pringle says, I'm new to your channel. What's your favorite alts? You can go to arcanebear.com and you can see what we have in our portfolio. Kyle says, if you say it enough, it eventually clicks. Yeah, we agree. We're just trying to repeat to show people the importance and value of going to the gym frequently. That's how the real gains are made. Don't ignore that. I know it's not the most exciting thing to think, oh my God, I have to actually put in the work all the time for maybe a few years. But that's how it works, ladies and gentlemen. If you think you're going to get rich quick, that means you are probably thinking you're going to get lucky, and then you'll probably be unlucky and just end up losing money. So we're trying to help save people from making all those things. David Sal says, when Cathie Wood and others start pulling out of investments, we need to pay attention. I believe Cathie Wood actually just made a big investment. As far as I know, Cathie Wood, SEC filing said the other day they were accumulating Ethereum and Bitcoin. So that's the opposite. They're not selling, they're buying. What move can we expect for altcoins? It's, again, totally irrelevant. Who cares? What's an altcoin anyways? Most of those will totally fail and go to zero. We like to do venture capital research. We spend a lot of time focusing on the most valuable research that's humanly possible. Again, you can find that all by going to arcanebear.com. We'll start to integrate more of that into our daily episodes, but unless you like reading, a lot of you already get bored with the non-reading stuff, so I don't think you'll do well if you just think, oh, what's an altcoin? Who gives a fuck what altcoins do? 90% of them are worthless. Yep. What percentage invested in BTC versus alts? I usually run around 40 to 60% in Bitcoin, although I'm fairly heavy in USDT at the moment. Again, since that $56,000 drawdown and then that we shared on April 23rd. Yeah, they pulled out of NASDAQ and went more into crypto. Nice, yeah. I'm not a traditional investor in terms of like being in the NASDAQ. We use the VIX, the S&P 500, the NASDAQ, just a general market sentiments. I haven't touched a traditional market since like 2011 when I bought my first like pot stocks in Canada, but I haven't done anything since then. I've also been a non-resident and offshore since then as well. So that's a long time ago. It feels like 13 years ago? Jesus Christ. Awesome, ladies and gentlemen. Thank you all for joining us today. We'll see you guys again on the next episode. I really appreciate this for all of you that are brave enough to stick around for the enduring aspects of visiting the gym on a daily basis and repeating the things that bring you gains. I appreciate that. And think differently, by the way. It'll help you out.